Well, thanks everybody for tuning in to yet another episode of Profit Insights, and it's absolute delight to have Mr. Raamdeo Agrawal speak to us today. And not for any other reason, it's always a delight to talk to him, but I think we are talking to him after a week of a lot of developments. And Mr. Agrawal, it's great to talk to you because until, let's say, until the 13th or the 14th of August, the markets and the hopes were looking in a bit of a disarray. And then the S&P upgrade happened. 15th August, Prime Minister Modi unleashed those GST reform conversations. And today we just learned that the HSBC manufacturing PMI numbers are at record high levels for services, and manufacturing too has inched up. My question to you, sir, were those reforms and that upgrade and the global peace talks, are they the much needed necessities in a currently growth-starved world and a slowing down Indian economy?
So, I think Indian economy itself is slowing down in relation to what it was doing last year. If you look at the lot of high-frequency data, there is a slowdown in the economy, and it needed to be kind of brought back into the right track. Say like, so I think it started with the monetary policy. Sorry, it started with fiscal, with the budget giving a bit of a boost. Then monetary policy, where credit flow became better. Then came the rate cuts, and now comes the GST, Diwali dhamaka, and I don't know what all is there. But I think these are all leading to corporate performance picking up maybe in second half, and then from there, I think it will be full blast maybe next year.
Got it, sir. Is this enough, Mr. Agrawal, or do you think we need to do more? Because we've always been, as a country, spoken about as a policy environment which does incremental reforms, not big bang reforms. There have been some attempts made. Was this the first of the big bang reforms that is needed?
Yes, I think by Indian standards, it looks to be pretty good. And it all depends on how much ifs and buts we put in the reform itself. Because what happens is that whether all the 12% will go to 5% and all the 28 and above will all come to 18%, do they do that cleaner job? That is very important. That we only have two rates, and I think why should I have even 40%? I think just club every damn thing on 18 and keep it very clean. Because GST is about the very simplified tax system, digital tax system. So the moment you have more complicated rates, maybe it might be a little more tax accruing or something, because I'm interested in making it so simple that the compliance increases. With the compliance increase, you get more taxes. So I'm not meaning that you should have lower tax collection. Actually, it will lead to higher tax collection if on a sustained basis you keep lowering down the GST. So this round, say 518, I think next round we should do 515, then we should come down to 510, something like that. So that, as the economy responds to the lower cost structure, consumers benefit, and it is much more affordable to consume in India. Because right now, when you go to buy consumer goods, I think it is, the taxation on the consumer goods, particularly hotel rooms and all, are so high that it pinches, So I think this is going to be a big one. And I think the success of this will encourage the bureaucracy and the politicians to take even more bolder step. Because right now, America is setting the trend that they're just throwing all the rule books to the in the air, and they are showing that yes, things like Dodge, where they are cutting the government expenditure. They're negotiating very hard with every trading partner. So I think those are good part of what is happening in the world right now, and I think those things will prevail in other economies also.
Got it. Mr. Agrawal, from an investing lens, how do you look at that perspective, that piece, that a very strong relationship that existed for such a long time? There are some how do I say, differences around that, and India and China are warming up to each other as well. How does that impact an investor's mind in Mr. Raamdeo Agrawal?
Yeah, I think I mean, these are two different things. I mean, improving the ties with China is a good thing, and I think we should strengthen the relationship with America also. Why the two relationship has to be at the cost of each other? So I think there is enough scope for US relationship to be strengthened on its own merit, and China, in any case, they are our neighbor. So we have to have a very strong relationship to, the peace at the border leads to a lot of peace and, kind of a focus onto the domestic economy rather than on the borders. So clearly, I would say real priority is the strengthening the relationship with China, and equally at the same footing, because ultimately America is the biggest consuming market in the world, and their market economy. So you can't do without them. So I think our very healthy relationship, which has been going on for decades, I hope we get over this current hump, and there is no any permanent damage to the relationship.
Yeah, much needed. The one small macro policy question, Mr. Agrawal, is the belief that some quarters of the market have now, that because growth has slowed down a bit, and because inflation might come off as well, the RBI has more room to cut rates, and the terminal rate could be 5%, which could actually be good for growth. Do you second that, sir?
Yeah. See, it's a Lollapalooza effect in the sense that credit flow, cost of credit, the regulators becoming much more accommodating, lower fiscal rates, lower monetary kind of a thing, and then lower GST. So you keep throwing to the this thing whatever is required for consumers to come out and consume, because without that the private capex, which is one of the largest engine for any economy to happen, is not happening. Because the private capex is saying that, boss, if there is no demand, why should I put up additional capacity? Because that will become a big burden on me. So the moment consumption starts, you don't have to tell them, they'll put up the capacity. So I would think that it's a start of the engine, and I hope this GST is a good starting point. And as much as they can do it in this, since Prime Minister has already said that he is going to give the Diwali bonanza, actually they should load even more than what market is expecting. So this is a good time to really go whole hog into reforming this policy.
Okay, well, I hope somebody out there is listening, and I'm sure they are listening. Mr. Agrawal, what does that mean for the markets as well? You've been on record now saying that after that initial spurt post-COVID, the earnings growth has kind of come off a little bit. And the real wealth only happens when we move to 1,500 to 2,000 rupees EPS on the Nifty. Does that happen in the next couple of years, sir?
Yeah, so we are at about 1,000, 1,100 kind of EPS, 1,100 rupees EPS. Now I think we are stagnating at about 9-10%. This quarter actually is better than what the analysts they expected. That is, at my end, our analysts were expecting about 6-7%, and actually turned out to be 9-10% of the earnings growth. So clearly, analysts are really little behind the what to expect. And as you said, PMI and other things are somewhat better. Oil is holding out at 65, 67. So I think there are a lot of backdrop is very good. Just that little bit of push in from the credit growth particularly, that will lead to the better consumption. But credit growth is yet to pick up, and there is no reason why it will not pick up. As the RBI and even the Finance Ministry, they are on the job to see that credit growth picks up, and at a lower rate and lower prices of the products, I think consumption will pick up. So, but then we have to have patience. 6-7 months it might take. But so my sense is, by the time it is third or fourth quarter, you will really see impact on the earnings growth. But then markets will be smarter, because companies will be working 3 months, 4 months in advance. So the mood is going to be much better. So I won't be surprised if the markets start going to new highs more just around Diwali time. And once, I think on the day of announcement of GST, actually, when you say that, okay, from today onwards, instead of 28, it is 18, I think numbers will be very different. The index will be very different. Now, where it will go, how much it will go, domestic flow is so strong, and foreigners are kind of not interested in India. And I don't think they'll be interested, because for whatever reason, global reasons, they may not be interested in India, because the valuations don't fit into their scheme of things. And they'll keep missing out on India because India's domestic flow is so big that we'll be able to take the market ahead on the back of earnings growth.
In the past, you've told me, Mr. Agrawal, that जो फिरंगी बेच के गया वही ऊपर के भाव में लेगा. Can that happen over the next 3 years?
Yeah. It looks like, because we are running ahead so fast that they want to catch up. Whenever I go to Singapore, Hong Kong, they all tell me that they love India. They have whatever little they have invested. Some guys, they have left. How do we re-enter? I said, India is a decadal story. It's a compounded story. And, bereft of any kind of recessions and all. There is a slowdown, but there is never a recession kind of situation. So it's a market which is very compounded, anywhere between 10 to 15% per year, and with a very limited drawdown unless there is some global problem. So, but then you can't be in and out because when it will explode, nobody knows. So I think they will come back. Of course, they sold at 20,000, 25,000. I think they have to come. If this earnings blast happens post-Diwali, I think they may relook at it. But looking at the kind of underweight they are in, I believe there was some note that 60-65% of the FIs are underweight on India. So that is also creating another bazooka kind of situation that whenever they turn, everybody will turn positive. And at that point of time, domestics also want to buy and foreigners also want to buy. So what is going to happen? So I think if the earnings pick up, quite possible P will also go up. So if earnings comes to 15-20% kind of growth next year, say 26, 27, I think the P multiple might go from 22 to more like 25 or so. So that kind of a situation is also possible.
Wow. Well, it will be amazing. Okay, so viewers, the first half of the show, we've discussed the macro and Mr. Agrawal's view on what shapes up the environment going ahead. He's clearly constructive on the GST cuts and the monetary policy actions that have been taken. I would love to know from Mr. Agrawal how to play this as well. Mr. Agrawal, the common lamenting that people do when it comes to India, that there is no AI story. There are very few globally competitive stories in that sense. So do we look to create NVIDIAs and Googles, or do we search for our versions of NVIDIAs and Googles?
Yeah, so see, basically NVIDIA and Google means what? They have a very high rate of earnings growth. Okay. So that's why I ended up saying that our NVIDIA could be, say, Zomato kind of a company. See, one thing is that internet is a magical thing, and internet is there in full force in India. Whether there will be internet technology companies or internet using companies. So, because internet is very democratic, it is spread across and it is a real time. Kashmir to Kanyakumari, you can do it in a kind of flash. There is no gap. So, it has that tendency to create businesses or accelerate the businesses very, very fast. So, basically, if you look at NVIDIA, which is the most valuable company and most, I didn't know the name 3 years back, and today it is the company. It has grown about 35-37% in last 25 years. It is almost 5,000 times from the issue price. So what I'm saying is that is there a company or is there a business in India which can grow at more like 40-50% and with a massive TAM, in the sense that the addressable market is very large. And that's where I see the quick commerce or all the internet businesses where actually it's a value migration from a traditional source to the new source of delivery or buying through internet platforms. So in that case, what happens is that large opportunity get satisfied by these new platforms, and hence the growth rates can be 100%. All these quick commerce companies are growing at close to 100% per year, and it looks that they can grow, forget about it, 100% for a very long time, but at least 50, 60, 70% they can grow for next 3, 4, 5 years till they become 10% of the total grocery market. Now, if that were to happen, right now they're not making money. But when they start making money from 0.5% to 1% to 2%, 3%, I think the earnings growth will go at more than 100%, 200% because of operating leverage. So we are into a massive. So for me, NVIDIA doesn't mean internet company, AI company or whatever. every country will have a different business which will grow at a very rapid pace. Somewhere it might be banking, somewhere it might be quick commerce, somewhere it might be tech companies, somewhere a user of the tech. So what really matters in investing is where is the tailwind? Where is the tailwind which can propel the company at a very rapid pace for many years to come? So that's where I think India will have an opportunity of building Internet's best businesses the way it is in US and all. I think in next 10 years out of top 10 companies, at least 4-5 of them will be digitally oriented companies.
And Mr. Agrawal, there is no telling what will those be, but you reckon that from amongst the listed crop of internet-backed or internet-based companies, there could be some of them which could be in the top 10 companies over the next 10 years?
Yeah, I don't have any doubts about it. It will be. It will be, and they will lead the pack. Right now, since they are ahead, they are large, they are capitalized well, and they are consumer-facing, so they have a great chance. High probability that 99.9%, they have the chance to be in the top 5-10 of India's market cap as we go forward. And how exactly India's market cap will grow at about 18% per year for next 10 years? This will be led not by my old businesses. It will be led by these businesses because they not only grow the top line, they also grow the bottom line. So I think the complexion will change. Say, private sector banks in 95, there were no private sector banks. Today, large market caps are coming from private sector banks. Like that, in next 10-15 years, you see digital companies coming from various businesses will dominate the market caps.
Viewers, I must recommend, Mr. Agrawal had recommended me to read Value Migration by Adrian Slywotsky to prepare for a show on value migration. I sense some bit of it in the conversation that Mr. Agrawal is making right now. Mr. Agrawal, we should do a repeat of that series for sure, on value migration, on compounding and more. But I would love to, I would love to ask you my next question, sir, and which is on consumption. So because this internet bases are based on consumption, this GST reforms help consumption. Do you think this ushers in the near term a growth in consumer facing businesses, discretionary or staples?
Come again?
The GST cuts that have been announced, can they spur consumption, sir?
Yes. Yeah, it will, no? Because if, say, in automotive, which is 50% of your manufacturing, see, Neeraj, our manufacturing is growing, struggling to grow at 3.5%. My GDP is growing at 9%. So the whole growth is coming from services. So how do I grow at 6-7% on manufacturing? So we have to go and ask ourselves, what is keeping us back? Why we are importing so much of manufactured product from outside? So not all the reasons, but one of the reasons is also the taxation. We have to make our goods much cheaper and affordable to the masses. Masses have very limited income, so the only way you can make it affordable to them is to make the goods only cheaper. And the propensity to consume is very high, and you give them credit. So then when the goods become cheaper and you give them credit, obviously the consumption will pick up. And we will see, as aggressive you are in giving the concessions, keeping your fiscal balances in mind, I think markets will respond. And I think once they respond here, then all the government officials, they will know that, okay, in 3 years' time, we are again back to collecting more than what we were collecting earlier. Let's go and do it from 18 to 15. So the whole objective should be that how do I collect X amount of taxation and grow the economy at a rapid pace. Just that somebody is rich, so my objective should be to collect more taxes rather than punishing any class of consumers, because the purchasing power in India is confined to the top 20-25% of the people. So if you don't make the consumption attractive for them, I think you will miss the bus.
Yeah, don't single out. Okay, that's a valid point. Sir, autos, consumer discretionary, they've struggled for the last 6, 9, 12 months, if you will, broadly. I may get the timelines off here and there, but they've largely struggled in the recent times. Can this change the fortunes? Do you expect a meaningful uptick there?
Yeah, I would think that, to my limited understanding, of course, you have to speak to the companies, but the credit availability, credit flow, don't stop the, you have regulators have responsibility to see that credit flow is very smooth, and actually it is their responsibility to, instead of blocking the credit, have the macro level kind of a control. Now everything is flowing digital, so of course you have to see how the banks or NBFCs who are handling the credit are doing in aggregate rather than micromanagement of this you do, that you do. I think sustained credit flow in the economy at about 15-16% is very important. But then of course it is all wishful thinking. What actually regulators will do, that time will tell. But good credit flow and reduced GST, meaningfully, very clear. I think it will be wonderful combination.
Mr. Agrawal, the other question is on whether you would believe that the portfolio, your portfolio or an average portfolio, should be more domestic oriented currently because the global piece is a bit unknown, or do you find value in the exporting sectors?
Exporting sector. So I would be giving more value to the domestic oriented profit than export oriented profit, particularly to the US, because now the policies are such that we don't know which way the wind is going to blow. I mean, there could be a breakdown for at least a quarter or something, or there could be, because I don't see tailwind. It is how much is the headwind? Is it going to be the same or headwinded? We don't know. Right now it is headwinded. So we don't know what is going to be happening in next 2, 3, 4 years. So I would, in my mind, 100 crores coming from Indian consumers and 100 crores coming from, say, US consumers. For me, 100 crores coming from Indian consumers is almost 1.5 times more valuable than US consumers.
Wow. Okay. The other thing is, sir, because you look at cycles and the profit pools so consciously, if the last 25 years were dominated by banks, IT services, and some others, do you think, while you are constructive internet, but non-internet IT or banks, pure play banks, do the profit pools and their weightages in the Indian markets change decisively? And are there other sectors beyond internet-backed businesses that could become larger as a pool over the next 5-10 years?
Yeah, I think bank and financial services and now capital market services. Neeraj, people are undermining. I'm telling you, this capital market services, you might club it wherever you want to be. It will become very large. Right now, approximately, see, the way to think about it is 0.5% of the total market cap. So market cap is about, say, 5 lakh crores or say, 480,000 crores. So the total addressable services brokerage or commission and fees is about 160, 170 on the free float. Actually, our free float is about 2/3. So on the free float, the revenue base for the industry is about 0.5%, which is about 155, 160,000 crores. Now free float is growing at, so the market cap is growing at about 15-16%. But since promoters are selling, now that's the only block left to be sold to the investors who are coming in day out. So now promoters blocks are coming. You might be seeing so many promoters blocks coming. So promoters are selling a little more. So I think the free float market cap in India is growing at about 18%. So in 4 years flat, it will double. So the addressable commission or addressable market is growing at about 18%, which goes from 1.5 lakh crores to 3 lakh crores in 4 years flat. And it is the nature of the business of the capital market is very consolidating. I mean, you have only about 10-12 meaningful brokers. 10-12 brokers have 80-90% market share in asset management, in wealth management, in the broking, and in other market intermediaries. There are only 1 or 2. So it's very, very consolidating. So, and asset light, very, very asset light. So I think there is going to be a lot of wealth creation from this particular segment also.
And sir, if I can just, last question here today, and which is that in this cohort, because it's a wide cohort now on the listed side as well, are the service companies a better bet, or are the ones which are giving those platforms, if you will, and those services a better bet? So if you were to, do you pick and choose, or do you believe it's good to buy the entire cohort of businesses?
No, then you have to get into, kind of entire value chain, figure out who is good in manufacturing, who is good in distribution, and who is good in integrated kind of thing. But even just pure distribution, but very powerful distribution companies are also going to be very valuable. So I think you have to see who is good at what level. And so my sense is that this is the era, like the next 10, 20 years, this will give birth to one local Morgan Stanley, one local Merrill Lynch, one. So I think we have created world quality, world size, and world
class,
global size banks.
Yeah.
I think now the time is to create world class asset management companies, world class broking companies, and I think you need a lot of support from the regulators for that to happen. Of course, they have been very helpful, and that's why we are seeing some emergence of this large houses. But as we go forward, I think we can see emergence of few very large companies.
Well, and we'll be here talking about that with you. I have no doubt your company would be one amongst those because of the kind of feedback that I get from people who interact with your firm in various capacities. And we love talking to your firm as well, sir. But thank you so much for talking to us today. And we are at 21st of August, Mr. Agrawal. Diwali is 2 months around. I'm sure we'll get a chance to talk to you once more ahead of Diwali.
Yeah. Sure.
Thank you, sir. Thank you so much for talking to us.